Chapter and Company Secretary Anup Luharuka ji, who will be addressing the session. I again thank National Law University for accepting our proposal and coming for this, organizing this webinar through this for this program. I thank Vice Chancellor Madam for coming and addressing the session also. So over to Sir for addressing Anup ji.
Thank you, Jyoti sir, for explaining the background of various changes that was necessitated post the launch of GST Act. Now, for the session, I turn to the expert CACS Anup Luharuka ji to deliberate upon the recent changes in GST laws and how GST as a tool had helped the growth in Indian economy. Now, Mr. Anup Luharuka is both a company secretary and chartered accountant. He is also registered insolvency professional, registered valuer, and diploma in information system audit, and also published various articles and spoken on various forums with respect to GST. Now, sir, over to you for your address.
Anup, you're on mute.
Thank you very much. A very good afternoon to the respected chairman, Bhubaneswar ICSI, respected professor of National Law University Odisha, and all my dear students, members, and all the viewers. Thank you for the warm introduction. I pray to the Almighty for the well-being for each one of you and your family. Before beginning the topic for this afternoon, first of all, I happy Ravindra Jayanti to the all. It is glad to be part of this noble initiative of the government, Azadi Ka Amrit Mahotsav, which is to celebrate and commemorate 75 years of independence and glorious history of its people, cultures, and achievements. Azadi Ka Amrit Mahotsav is celebrated to pay homage to India freedom movements and freedom fighters. Our country will remember all the significant landmarks during Indian independence movement. As we all know, revenue is the backbone of every country. One of the crucial part of the governing a country is, in our country, India, taxes, whether direct or indirect, are the integral part of two of our most important pillars of the Indian economy. The introduction of GST in Indian economy has replaced multi-layered, complex indirect tax structures. Earlier, we have service tax, excise, several other acts. So this GST has given Azadi Ka Mahotsav. They have replaced all the acts into single act, that is GST. So we can say this is Azadi of various other acts, and it is now bundled into a single act, that is GST. So the introduction have GST, and with a simple GST Act is a simple, transparent, and technology-driven tax regimes. And there are only two things. One is GST Act, one is GST rules. So all other acts earlier was confined to this CGST, SGST Act, and the rules. Now what Madam said about the what rate would be imposed, as said by our chairman also, the GST Council is all the recommendation is to be placed in the GST Council by the central and state, and GST Council take the decision about the rate or change in rates and what policies should be adopted, and it should be adopted with the concurrence of the central and state. If any, suppose tax is exempted or tax to be imposed, all decision will be made in the GST Council only. Even any things is proposed in the budget, it will go through the GST Council only. In the GST Council, since there is both the members, central and states, so they are the authority to decide what should be the final course of the action. Today, I am here to address a session on recent change in GST law and GST, a tool for growth in Indian economy. So let us start these topics. Just I am sharing my screen.
So the members of the GST Council are ex officio members.
Yes.
They're not from any specialized field.
No, the central government and state government will decide okay, who will be the nominated members actually from there actually.
So it's all completely in their control. Now, from many legislations, we are now under the one legislation.
Yes.
There's no freedom. There's no freedom yet.
But it is the domain. You can say you are actually, but it is under domain of center and state authority who will be their members.
Yeah, so we are still under the legislation only. Doesn't matter under one legislation or 10 legislations.
Yeah. Just I am sharing my screen. Entire screen.
आपको क्या ऑप्शन नहीं मिल रही?
Just I am trying to share my screen.
आशीष पता करो उसमें वो तो नहीं है इनका इनेबल ना किया हो.
परमिशन देना तो नहीं होता देवसी से.
I don't know in the Zoom there is a problem.
He's already permitted, but can you see the present now button down down your screen?
Just hold on.
There is a present now button near the raise hand.
Okay, just I'm looking actually. Open the Google. No, this one.
No, here in the main screen, turn the microphone, then the video, then the turn on caption, then the raise hand, then the present now.
Present now, this one.
Yeah,
this one.
The arrow one.
The arrow one.
Yeah, just you share this.
Yes, there you click and share the screen.
Share. Yes. Yes, I hope the screen is shared.
Yes.
Yes, the screen.
Yes, it's coming. Yes.
Yes.
Coming.
So we are into the 5th year of the biggest indirect tax reforms in India. Since introduction 2017, the Indian GST regime has gone through several rounds of amendments. Nowadays, several notifications, several amendments, several press still is going on. It is not stabilized, we can say. So we have to go through several changes in terms of, you can say, notification, in terms of press release, in terms of other clarifications. So one should go through all the changes to cope up the changes made in the GST. So we have tried to cover recent changes in the GST law. So presently in the last, we can say the 4 to 5 months, several changes have been made. GST input tax credit, E-invoicing, scrutiny of returns, amendment in the definition of the supply, which is pillar of the GST regimes, and other updates. So we will cover today's session. We will cover one by one why we have chosen GST input tax credit, because it is a very, very important pillar of the GST industries. So let us understand one by one what changes have been made during the last 4 to 5 months. Then we will cover tool or mechanisms of this Indian economy of GST. So let us go one by one. First, we will going to be covered GST input tax credit. So before going into GST input tax credits, one of the very, very important changes have been made in GST input tax credit, which is backbone of the GST industry. Let us understand what is GST input tax credit first. So GST input tax credit has been defined under section 2 brackets of CGST Act. So if any changes have been made, how to read the changes? First, we need to understand. First, we have to refer what was the pre-amendment and what is the post-amendment and what is the impact of amendment. This need to be understand for better understanding. In the simple words, first we need to understand what is the GST input tax credit. So GST input tax credit means what? It is the seamless flow of input credits across the chain of the manufacturers of the goods till it is consumed. It is consumed means what? When it is sold actually, right? So this is the entire seamless flow of the input tax credit. So we can say it refers to tax already paid by a person at the time of purchase of goods or services, and which is available deduction from taxable. In other words, we can understand from this very simple language. Suppose a particular registered person purchase goods from another registered person. So when he is getting the invoice from the suppliers, so whatever GST he is charged, then the recipient can take the credit on the same. That is called GST input in the simple sense. So we have given also one example to understand GST. Suppose a trader purchases goods worth ₹100 and pay tax 10% on it. So 10 rupees is the GST input for the trader actually, that we need to understand. This whatever 10 rupees in the invoice, that is the GST input for the trader. GST input charging section is section 16. Read with section rule 36 of GST rules. There is two sections. If you need to understand the GST input, we have to read section 16 of CGST Act. Read with rule 36 of CGST rules 2017. What the section 16 says, there are four important conditions under section 16. What are the important conditions? The dealers should be in possession of the tax invoice. The said goods or services have been received, returns have been filed, and the tax charge has been made to the government by the supplier. These four are the key conditions to take the GST input by the recipient. These are the very, very important important condition to take the GST input. Now, what is the change made under section 16? The change made under section 16, they have inserted new proviso 16 to double A, 16 bracket to double A. So what they have added actually, earlier, before going into these changes, we need to understand what is GSTR 1 and what is GSTR 2B. Suppose if we purchase goods from others, suppose Mr. A is purchasing goods from the Mr. B, and the GST input is say 10 rupees. Mr. B is the supplier, Mr. A is the recipient. Then Mr. B has to file GSTR 1 within the due date, and it will be auto-populated in GSTR 2B of the recipients. I am repeating once again, Mr. A purchased goods from Mr. B, GST input is 10 rupees. Mr. B, since is the supplier, is required to file GSTR 1, and after filing the GSTR 1, GSTR 2B auto-populated in the hands of the recipient, and it will show 10 rupees input. So what does it mean? Until unless the supplier file GSTR 1, it will not be auto-populated in the recipient, and it will not be shown in the GSTR 2B. So what changes the government has made? The details of the invoice or debit note referred to in clause 16(2)(a). Section 2A means what? Section 2A means the dealer must have the tax invoice has been furnished by the supplier in the statement of outward supplier GSTR 1 that we have discussed, and such details have been communicated to the recipient of such invoice or debit note in the manner specified in section 37. How the section 37 manner specified? They have specified the supplier has to file GSTR 1 for the same. Thus, ITC to be taken only for those invoices whose details are reflected in GSTR 2B in the respective supplier vendor and have filed their GSTR 1. The government by notification 40/2021, it is very much clear with effect from 1st January 2000. They have added one further condition: the supplier must have filed GSTR 1 and it should be auto-populated in GSTR 2B of the recipient. Then only recipient can take the credit. In other words, suppose we have purchased a goods from Mr. A, purchased goods from Mr. B, but Mr. B has not filed GSTR 1. Then Mr. A is not eligible to take GST input. So this restriction is imposed with effect from 1st January 2022. This is a very, very important changes have been made under section 16. So what is the impact of these changes? Impact of these changes is no input tax credit unless details are populated in GSTR 2B, furnishing of details of invoice, credit note in GSTR 1 or through IEF by the supplier is now mandatory to take it. Earlier, this was not the condition. Now, with effect from the 1st January 2022, we need to ensure that supplier has filed GSTR 1 so that we can take the credit. Any confusion on this aspect of GST input?
What mechanism do I have to ensure that he files GST1?
I will verify the GSTR 2B. I will verify my GSTR 2B that GSTR 1 is filed.
We have to ensure if GSTR, we have to see our GSTR 2B, whether in GSTR 2B that supplier name are coming or not, and whether GST input amount are coming or not. And GSTR 1 should be filed by the supplier within 11th of the every month.
11th.
So once he filed 11th in the month, it will reflect on 13th day to the recipients. So we have to ensure when the GSTR 2B supplier names are coming or not. By GSTR 2B, we can ensure about the GST input. This is the mechanisms only by which we can ensure about the GST input.
No, but if the other person doesn't file, then what do I do?
If the person doesn't file, then whenever he will be filing, then we can take the input only. Suppose in a particular
I'm going
month
to
he has
suffer
not
now.
filed.
I'm going to suffer.
Yes. Otherwise, you are correctly said. The recipient will suffer. Suppose he has filed by delay of the 1 month, then the GST input can be deferred by the 1 month. This provision, actually the objective of the government to introduce this provision to evade the taxes. Earlier, what is happening, most of some of the fake, in case of the fake invoices cases, they are not filing GSTR 1. That's why government has implemented these provisions. Until unless the supplier has filed GSTR 1, recipient cannot take the credit. If he has filed from the delay, then you can take the credit only in the month in which he has filed.
Actually, this is to block the fake invoice cases.
Yes,
lots of fake invoices. People are taking advantage of the GSTR input credit to evade taxes.
Yes.
And there are fake invoices.
The entire government, before introduction of this provision, just I am giving the background. Earlier, the government has brought by Rule 36, 80% input can be taken, then 85%, then 90%. Then government want to take control at the inception of the transaction instead of the post transactions. That is why the government has introduced these provisions. For the legitimate buyer and seller, there is no problem. What we can do, we have to ensure that we have to write a letter to the supplier, please file GSTR 1 on the time. Once it is implemented, then this tax evasion can be reduced to some extent. So this provision, in the nutshell, the government has changed this GST input tax. This is the only provision this government has changed. 16 to AA, we have to ensure supplier has filed GSTR 1 within due date. If it has not filed, input will not be lapsed. If he has filed in the next month, we can take the GST input in the next month only. So important sections, what we have understood, section 2(63) deal with CG definition of input tax credit. Section 16 of CGST Act is the charging section, eligibility of take GST input, and Rule 36 is relevant rules dealing with GST input. These three things are very, very important to understand the GST input concept. In addition to that, the government issued several notification and circular. We have to also read with these sections and rules for the better understanding of GST inputs. So I have summed up all the GST input tax credit in one go. So these are the points that registered tax person has to ensure for taking GST inputs. What are these points? Goods or service must be used or intended to be used in the course or furtherance of its business. Position of original tax invoice or supplementary invoice that we have discussed. The said goods or service have been received, returns have been filed, tax charge has been paid to the government by the supplier. And the next point that we have discussed, supplier of goods or services must upload the details of such documents in the common portal, that is GSTR1. Input tax credit, this point that is important points, and next 2 points is also important. Input tax credit in case of suppliers in installment would be on the receipt of the last installment of the goods, meaning thereby, suppose a particular registered tax person has received some goods in the installment, so he would be eligible only when he on the receipt of the last installment of the goods, he would only be eligible to take the GST input. And the last one, the law casts on the obligation on the recipient of supplier availing credit to the effect payment to the supplier within a period of 180 days from the date of the invoice. If such payment is not partially affected by the recipient to the supplier, Rule 36 obligates reversal, proportionate reversal of input tax credit so avail leading to the constitutional levy of tax and interest. Meaning thereby, suppose we are receiving goods from the suppliers, we need to make the payment within 180 days from the date of the invoice. Otherwise, if we have not made the payment, we have to reverse the GST inputs, and we can take the input only when we make the payment. So we have summed up, these are the very important provisions of the GST input that cover almost every points in regard to GST input. Now, any question on changes in GST input?
I think, sir, we can have question answer session at the end of the
last.
Okay, great.
Yeah.
Now, the next important changes is e-invoicing under GST, a step towards digital India. So, what is e-invoicing? E-invoicing is the exchange of the invoice document between a supplier and a buyer in an integrated electronic format. It is a system in which all the B2B invoices and export transactions are electronically uploaded and authenticated by the designated portal. E-invoice can be generated using utility available in the invoice registration portal under various software available. So, the government has brought e-invoicing. First, in the first phase, it was applicable to the taxpayer having an aggregate turnover of more than 500 crore in any preceding 3 financial year. It was effective with effect from 1st October 2020. Then, in the phase 2, the government has brought down the limit to 100 crores. It was effective from the first day of January 2021. Then government has brought down this limit to 50 crores. It was applicable from the first day of the April 2021. Now, the government by notification 1/2022 central tax, now its limit has been reduced to 20 crores. It was applicable with the first day of April 2022. Meaning thereby, if a registered tax person having aggregate turnover exceeding 20 crores in preceding 3 financial year, in any of the 3 preceding financial year, then the RTP has to follow e-invoicing provisions. So intention of the government is very much clear. The government want to bring entire government under the e-invoicing. They have started from the 500 crores. Now they have reached to 20 crores. Then one important question is why invoicing? Why the government is doing invoicing? Because it is a live generation of invoicing. It cannot be backdated. Point number 1, it is reduced tax evasions. The most important part, it will reduce the tax evasions. Real-time auto-population of invoice details into returns. Real-time tracking of invoices. Availment of credit in real-time basis in a transparent manner. Better internal control. Reduce tax evasions. Reduce the chances of fake GST invoices. Better management and automation of the tax filing process. So intention of the government is very much clear. They want to dot all the RTP under the e-invoicing, but in the phase manner. Presently, they have covered up to 20 crores, more than 20 crores under the e-invoicing. But there are some exceptions. This was applicable from the 1st April 2022, but the government by notification 13/2022, they have given some exemption, say for the good transport agencies, and person supplying passengers and the list and some SEJ unit, they have given the exemption for the applicability of the e-invoicing. The most important part, if RTP is having aggregate turnover in any of the preceding 3 financial years, they have to follow the e-invoicing. So what are the suppliers currently covered under e-invoicing? Suppose RTP is aggregate turnover more than 20 crore rupees. So what are the suppliers that is currently applies to invoicing? Number 1, suppliers to registered person, meaning thereby B2B transactions. Suppose I am registered, you are registered, then the e-invoicing is applicable. But if I am registered, you are not registered, we are supplying B2C, then e-invoicing is not applicable. Suppliers to SEZ, export with or without payment of tax, deemed exports, in these all cases the e-invoicing is applicable. But a particular RTP is supplying to the unregistered person, then e-invoicing is not applicable. It is only in case of the B2B transactions. So the important changes in the e-invoicing is now it has covered more than 20 crores transactions under the e-invoicing. Now, next important changes is scrutiny of return under GST. Under section 61 of CGST Act, the government can make scrutiny of the returns. Now it is a time to pull up our socks and be ready to brave the multiple queries which the department officers are likely to raise as scrutiny of returns begins for the first time since the new indirect tax regime was launched in 2017. Earlier the provision was there under section 61 of CGST Act, but now the government has started to scrutiny of the returns. Returns means what? GSTR 3B, GSTR 1, GSTR 9, GSTR 9C. Then CBIC on 22nd March 2022 issued standard operating procedures for the GST to streamline the scrutiny of goods and service tax returns filed for the financial year 17, 18 and 89. What the government has done, government has issued one SOP for the scrutiny of the returns. What is scrutiny of return under GST? That we have the section 61 of CGST Act provides for the scrutiny of returns and related particular furnished by the registered person. Scrutiny cannot be considered as detailed and independent of audit. Scrutiny implies verification of correctness of information submitted in the returns by the taxpayers. What kind of returns taxpayers are furnishing? They are furnishing GSTR 3B, they are furnishing GSTR 1. The government has empowered to make the scrutiny of return under section 61 of CGST Act. The recent changes, the government has issued SOP for the scrutiny of the return. So what is there in the SOP? The question is, what is there in the SOP? Till the time, actually, scrutiny of returns will be made online in the futures. Till the time a scrutiny model for online scrutiny of return is made available, as an interim measure, the CBIC has issued SOP to ensure uniformity in identification of return for scrutiny, methodology of scrutiny of such returns, and other related procedures. What SOP includes? What includes detailed guidelines on selection of returns, meaning thereby what are the guidelines to pick up returns under scrutiny, what would be the scrutiny process, what would be the scrutiny schedule, what would be reporting and monitoring, proper officer for scrutiny of returns. Further, an indicative list of parameters to be verified is also included in the SOP. So the government has issued this kind of guidelines for the scrutiny of returns. So registered, our suggestion is that registered tax persons should comply, disclose with corresponding tax liability property in the returns. Non-compliance of the same may lead to the scrutiny of the returns. So these are the very important changes made under the scrutiny of the returns. Now, another changes is under the definition of supply. The term supply is a very important pillar of the GST. It was defined under section 7 of CGST Act. Under 7(1) of CGST Act, the government has introduced retrospective effect with effect from 1st July 2017. they have broadened the definition of supply by including the supply of goods or services or both between any person other than an individual to its members or constituents or vice versa for consideration. In other words, this amendment seeks to classify the activity of a club or association in supplying goods or services to its member as a supply and therefore subject to GST. It was a very litigated issue earlier, and the government has brought the change in the section 7(1)AA of CGST Act, and it is cleared if the club is providing services to the members, it is subject to GST. Now, next important changes is the advance ruling under GST. What is the advance ruling? The governments are issuing several notifications, press release. If there is any doubt, then the RTP can clarify this doubt through the filing of an application through advance ruling. Section 95 of CGST Act contains the provision advance ruling means a decision provided by the authority or the appellate authority to an applicant on the matters in relation to supply of goods and services or both being undertaken or proposed to be undertaken by the applicant. Suppose Mr. A has a doubt whether the rate would be 5% or 12%. Then CGST contains provision under section 95 of CGST Act. He can seek the advance ruling on these matters. The application for advance ruling can be made through GST portal. So earlier this feature was enabled for the registered tax person under GST. However, this feature has also been enabled for unregistered person. So recently the government has enabled the provision for the unregistered person. Suppose Mr. A want to start the business, right? He is not registered under the GST, but he is not clear about some interpretation. It may be related to rates, it may be related to place of supply, it may be related to other matters. Then he can seek advance ruling under section 95 of CGST Act as unregistered person by online mode. It is a very welcome steps by the government. Now the unregistered person can also seek the advance ruling under section 95 of CGST Act. So with the introduction of these features by GSTI, unregistered person can also avail the benefit and apply for the advance ruling in case of clarification required. See, as we all know, the governments are issuing several notifications, several press release, several clarifications. So one may have doubt of a particular thing, then he can seek for the advance ruling. And another thing is, advance ruling is only applicable to SSC that advance ruling is applicable to a particular SSC who is seeking advance ruling. It is not applicable to everybody. Suppose Mr. A is seeking for the advance ruling, it is applicable to Mr. A only. Some other updates for seeking the registration under the GST, Aadhaar authentication is must. If we are seeking for the fresh registration, one has to go through Aadhaar authentications. And another, if we are filing any refunds, so we have to go through the Aadhaar authentications. It is now mandatory. Without Aadhaar authentication, it cannot be done. GSTR1 that we have discussed, GSTR1 is filed by the supplier of the goods, and the government has done some enhancement and improvements. Now there is in the GST portal, B2B suppliers, supply, export, credit or debit notes are all available in the GSTN portal. Earlier it was not available. Now registered taxman can see what is the B2B suppliers, SBA supply, deemed export, credit or debit. And another feature as in the GST portal, and aggregate turnovers completion for the financial year 21-22. Now the taxpayer this responsibility of the aggregate annual turnover for the financial year 21-22 has now been made live on the taxpayer dashboard with the following features. The taxpayer can see the aggregate annual turnovers. This can be viewed by the previous financial year. The taxpayer can also view the aggregate turnover of the current financial year based on the return file till date. The taxpayer have also been provided with the facility of turnover updation in case taxpayer feel that system calculate turnover displayed on their dashboard varies from the turnover as per their records. the facility of turnover update shall also be provided to all the GSTN registered on a common PAN. All the changes by the GSTN, their turnover shall be summed by the computation of annual aggregate turnover of each of the GSTN. These are the changes update made by the GSTN portals. One another important changes that has been made now, if suppose a particular registered tax person is filing daily returns, then the interest amount will be auto calculated in the GSTN portal. Suppose he has delayed for the 2 days, 3 days, then the interest amount will be auto. Also, this change is also made in the GSTN portal.
Earlier only penalty was auto-populated.
Yeah, rightly said earlier. Suppose we are a registered tax person is making delay in filing of the GST return, then the penalty was auto calculated. But now interest liability will also be auto calculated.
So,
What
government is trying to extract every point, every money government trying to extract.
Yes, the basic objective was earlier what is happening after filing the returns a span of 6 months. At 8 months, the government was coming out, you have filed delayed returns, you pay this much of the interest.
Pay this much of interest.
Now the government, the government intention to cover at the inception only that is the objective of the government.
You delay in filing means you pay the interest and file.
Yes, you have to file. You have to pay the interest. Then you can file the GST return only. And because one must visit the GSTN portal, they are making so many updates to make internal control on live transactions. So, GST is one nation, one market, one tax was the motto which gives GST applied to full capacity on 1st July 2017. As we all know that we have already discussed, it has replaced several existing indirect tax, including sale tax, service tax, and others. So, what is the impact of GST on our economy? So, it is simpler tax structures, no more cascading effects, supports for SMEs, increase in exports, impact of GST on different sectors. This collection in the March, there was a collection of 142095 crores, and in the April, highest collection for the April 2022, it's the highest ever in the history at 1.68 lakh crores. So there are two reasons for increasing this collection. One may say for the inflation may be one of the factors. Other factor is the government is tighten the screw for the tax evasions in so many sectors, like fake invoice thing. So now the RTP is complying the provision and paying tax in the times. So we see the data compared to previous financial years, we can understand the collection is increasing day by day. Now we are open for the questions answers also. Yes.
Growth of Indian economy here is when the government collects 1,60,000 crores in a month. Definitely, it's a good amount for government to plan something.
Yes, the government has collected 1.68 lakh crores. It was better than expectations, and it is a great sign of the improvement of our economy as well.
Revival of economy.
Yeah, actually, this is the important. I mean, our economy depend on GST collection, and government is working hard to in the GST sectors. And it is also the trend is also saying in the last April and March figures, economy is growing actually in spite of our several.
Sir, there are
going month by month.
Yes.
Okay, so there are few questions from our students.
Yes,
Yes,
yes.
Shivani, you can unmute and ask your question.
Yes, sure.
Sure, sir. Can you hear me?
Yeah,
Yes,
yeah.
yes.
Sure, sir. Thank you. So my question is, when and why an unregistered person is being given a locus in the advance ruling under Section 95?
So Section 95, there was earlier provisions in which, if you read the Section 95 of CGST Act, so under Section 95 of CGST Act, advance ruling means a decision provided by authority or the appellate authority to the appellant on the matter in relation to the supply of goods or service or both being undertaken or proposed to be undertaken by the applicant. They have also mentioned proposed to be undertaken by the applicant. It was earlier in the Section 95 of CGST Act. Unregistered person can go for the advice ruling, but there was no mechanisms to apply for the advance rulings. That is why the government has enabled the online options so that unregistered person can also apply for the advance ruling. If you read Section 95, they have given activity undertaken or proposed to be undertaken by the applicant. Proposed to be undertaken, it will cover unregistered person.
That is, says he is planning to supply something and he should know the rate of the GST.
Just I am giving, they have given the list, the matter in which advance ruling can be sought. Suppose Mr. A is doing the startup business, right? So he is not clear about the applicability of the GST or rate. It may be rate, it may be other interpretation. So then URP, this unregistered person can seek the advance ruling. It will always better to seek advance ruling to clarify the doubts. And
Yes, sir.
another thing, if you are not satisfied with the decision of the advance ruling, you can also make an appeal to the appellate authority for the advance ruling. Suppose decision goes in against you, you can also seek appeal for the advance ruling.
I hope Shivani's query has been answered, sir. This is another student
Yes.
from National University Odisha, fourth year. Uh, First of all, thank you for taking such a wonderful session. And I had a query regarding what was being conveyed by you. So I've
Yes,
heard regarding e-invoicing we were talking about. Now,
yes.
my doubt is that nowadays sometimes transactions from a B2B perspective happens either over exchanges or they happen through the paper mode. Not actual goods are carried from one individual to the other. So, do you think that e-way billing or e-invoicing can help in those kind of transactions? Any leakages which occur in those kind of transactions? So, one practice which I know is that there is a exchange called IndiaMart. Now, people place the orders on IndiaMart, cancel the orders, send the goods through black, or don't send it. He further trades it. If he further trades it, then there would be a leakage in the tax. So, what do you think about this, sir?
No, see, first of all, this e-invoicing is applicable to both provider of service or provider of goods, right? And if the aggregate turnover exceeds 20 crores. Now your question is, suppose Mr. A has given the order and he has cancelled the order. Then credit note is also covered under the e-invoicing. Debit note and credit note issued under Section 34 is also covered under e-invoicing only. So this transaction will automatically covered. It does not mean that suppose Mr. A is given the order and he will cancel the thing, and that's why the government has included invoice, credit note, and debit note issued under Section 34 of CGST Act to control this kind of transaction also.
Got your point, sir. But the exact question was that what if he actually conveys does so basically he makes a trade but doesn't transfer the goods, and then he makes a further trade, do it all in black, doesn't put the invoice, and then there would be GST leakage. So how do you think we can plug this
No.
hole?
Under the e-invoicing, there's an e-way concept also, right? If your transaction is exceeding rupees, in case of the goods, 50,000 and 1 lakhs as the case may be, then he is required to issue the e-way bill, and the goods, and it will go through transport by the road only, correct? So in this case, if the e-invoicing is going to be issued, then it will be very much under the control. In case of services, actually, if the turnover is exceeding 20 crores, then since the e-invoicing, there are three things. One is invoice, one is credit note, yes, one is debit note, right? So when you issue the invoices and invoice is cancelled, then the credit note is required to be issued. Then it will nullify in the books of accounts. In the books account, there will be no transactions. So irrespective of fact whether he is making the black one or something, the books of accounts is not going to be affected. There is no turnover in the books of accounts. If there is a turnover in the books of accounts and the goods are not supplied or services are not supplied, then is a question mark. If the transactions are cancelled, then a credit note is required to be issued.
Okay, thank you so much, sir. Thank you for
Yes, yes.
I think, sir, there is a question in your chat box from Devans.
Yes.
Is the ITC be reversed?
So basically,
Ah.
basically his question is if what will happen if input tax credit has been claimed by the buyer with respect to one transaction, but the supplier doesn't furnish the outward details. If there will be mismatch in information uh, between the supplier and the buyer, then what will happen?
Yes, very good questions. Suppose if the supplier, first of all, if the supplier has not filed the returns, I mean, what returns is supplier is required to be filed? Supplier is required to file GSTR1. If the supplier has not filed the returns, then the recipient cannot take the credit. Recipient can only take the credit the time when supplier will file the returns. If there is a mismatch, mismatch means what? Suppose there is a mismatch between the registration number or maybe the amount, then the supplier has to make the correction in GSTR1 in the coming months. Then it will be reflected in GSTR2B. Then the recipient can take the credit only.
So
I hope it is clear.
if there will be mismatch, then also the input tax credit cannot be claimed.
No, if the GSTR1
Yeah,
is not
because
reflected, then you cannot claim.
Okay.
yes, suppose just I am giving you an example. Mr. A purchased goods from Mr. B, right? What Mr. B has done, by mistake, Mr. B has not given the right GST registration number. Mr. B has filed the returns, but Mr. B has not given correct GST registration number. What will happen? Mr. B has complied GSTR1 provisions, but due to the wrong GSTI number, it will not reflect in GSTR2B of the recipients. Then the recipient cannot take the credit. Then recipient has to inform to the supplier, please make corrections. Then he would be making correction in the next month GSTR1. Then he would be taking credit only.
So basically, the onus is on the buyer to see to it that the supplier.
Yes, you're very much correct. Everything is shifted to the buyer.
Buyer
You
now.
have to make the due diligence. You have to see whether he has filed right return or not, and also if he has not filed the returns, then you cannot take the credit also. So whole entire shift on the buyer only.
Now, actually, it happened only because of this lots of fake invoice
Yes, you are
cases.
correct.
Lots of frauds were noticed, and Raulkela and Sambalpur were heaven to that frauds also.
Right, correctly said. You very correctly stated. Actually, lot of frauds has been taken. Actually, to make control of this thing, government has implemented this provision, was effective from the 1st January 2022. Otherwise, what will happen? Suppose Mr. A, it is not reflecting in GSTR1. Government took action after 6 months and 1 year. After 6 months, he would not be available.
Sir, just one addition to this only. Many times it has also been found that there is, I hope I'm audible, sir.
Yes,
Yes,
sir.
yes.
Many a time it has also been found that there is web of the firms which is created only for the evasion of the tax or to claim the input tax credit only. And on
Yes.
the other side, we are saying that it will be the onus on the buyer to see whether the seller has filed the return properly or not. In this regard, can't we say that it is unjustifiable for the innocent buyer sometime when the
Yes.
sellers are doing like this, and on the other side, those persons who are committing the frauds, they are doing everything in a planned manner.
You are right. Actually, the, taking GST input, you're a constitutional right. But what is happening actually? It is a litigated matters, and the government has shifted entire onus on the buyer as per the CGST Act. But uh, several matters are pending before the High Court, before the other courts for these issues. Because due to the fake invoice, some of the case, legitimate buyer may also be suffered.
Yes.
So there are
Suffering
several,
also.
yeah, and there are several cases are pending before the courts, before the judicial authority, because in the case of the fake invoice, the government is correct, but in case of legitimate buyer, it has a problem actually.
Sir, I have one question, sir.
Yes.
Sir, when GST was introduced, I think, what I can remember, it was the main intention that there must be similar tax rate throughout the country.
Yes. Yes.
But
Yes.
later on, at this point of time, when the entire politics is going on in the reduction of the price of petrol, don't you think that it has also been politicized for the same thing? We're going back to
So
the same
that's why
scenario.
It
petrol
is.
has been outside the purview of GST now, till now, because states are earning VAT from that, and they are not. They don't want to lose the VAT from the petroleum products.
Yes, presently
So
the petroleum products is outside the preview of
outside the
GST,
purview of
right?
GST.
It is under the VAT. Now the center and state is fighting. Center is saying state to reduce the VAT. Actually, it is a long debatable issues, but for the time presently petroleum product is not covered under the GST.
Yes.
So it is a political matter.
Yeah, we cannot discuss on this forum actually, right?
Actually, center is charging the central excise and earning lots of money from that central excise, and states are also earning from VAT. So nobody is going to lose their own
Yes,
revenue from that source.
yes. So it is a debatable issues, and it is a matter of center and state. Uh, can't move on this way actually.
Thank you, sir.
In fact, I have a question. Can I ask you?
Yes,
Yes, sir.
yes.
Actually, I am giving a practical example. See, one landowner has executed an agreement with a builder.
Yes,
Hello,
yes,
with a
yes, yes.
builder to construct flats on sharing basis 50%. Suppose
Joint
6
venture.
flats are
Yes,
constructed. Three belongs to the builder, 3 belongs to the landowner.
correct.
So my point is saying, what is the impact of GST on landowner? He will get 3 flats.
Yes.
What is the impact of GST on landowner on such type of transaction?
See, if the it is a very debatable issues. It is a kind of joint venture agreement. So far I understand, generally the landowner contribute the land,
Yeah.
and the developer will construct a building, and after that, for in lieu of considerations, then the flat would be given.
Yes.
This kind of transaction generally happens in joint venture agreement. So in this case, if the landowner sold the flats, there are two chains of transaction. One is the landowner is receiving the considerations in terms of, not in terms of money, in terms of in kind.
Yes.
And in turns, he is also selling the flats to the ultimate customer.
No, my point here is, out of 3, the landowner got 3 flats as per his quota. There are 6
Yeah.
flats, for example, 6 flats constructed. Landowner got 3 flats.
Yes.
So he has not sold actually. What is the impact at that point of time? And what is the impact after he sells the flats?
It will depend when the agreement is entered, is before 31st March 2019 or after 31st March 2019. There are so many aspects to be examined before giving these answers. So you can text me the transaction before 31st March 2019 and before 31st March after 31st March 2019, And what will the agreement we need to analyze before making any comment on this type of transactions?
No, agreement is 50%. He will give 3 flats to you. That's all.
No. I mean to say, when the agreement is entered, it is entered before 31st March 2019.
No, now. Agreement entered now. Agreement entered now.
Agreement if the landowner is selling the flats actually under the construction period, then GST would be applicable.
No, he is not selling the flats. He is only getting after the construction is over.
After completion of certificates?
Yes.
After completion of certificate, he will get the flats, then the developer will not charge GST.
I see. Then when the landlord will sell the flat, then he has to pay GST.
Sorry?
When the landowner will sell some of the flats,
then GST will be applicable, yes.
But till such time the handed over, GST is not applicable.
Because once the completion certificate, what happens, suppose the landowner flat is booked before obtaining the completion certificate, then the GST would be applicable. If the developer handed over to flats after completion certificate, then GST would not be applicable.
Okay, thank you.
Because it becomes an immovable property, and selling of immovable property is not.
Yes. And I want also to cover some FAQ and the E-invoicing. That is very important. Just a moment. One of the important question is whether the E-invoice apply to reverse charge mechanisms. If the entity turnover crosses the threshold limit for E-invoicing eligibility in March 21, that is financial year 2021, when should it start generating invoices? Suppose this 20 crore turnover crosses the limit in financial year 2021. It was not in preceding 3 financial year. It crossed in financial year 2021. Then when RTP will start generating e-invoices? In this case, if the business turnover exceeds the prescribed limit in a financial year, it will be required to generate e-invoice from the beginning of the next financial year. In our case, he will generate the invoice from the 1st April 2021. We have received so many queries on these questions. So the year in which limit is crossed, he is not required to comply e-invoicing. The next year, on the first day of April 2021, he is required to comply with e-invoicing provision because they have used the word any of the preceding financial year. Another is, does the e-invoicing apply to reverse charge mechanism transactions? First of all, GTA is outside the preview of e-invoicing, correct? Suppose Mr. A is having aggregate turnover of more than 20 crores. He is not a GTA, but he is paying tax under the RCM. How the paying the RCM? Suppose he is taking the taking the service of GTA, Good Transport Agency. So he is paying the tax on the RCM basis. In this case, e-invoicing is not required to be generated. It is required to be generated only in B2B transaction, credit note, debit note, export transaction, and SCJ transaction. In case of the RCM, not required to generate e-invoicing. Meaning thereby, in case of if the turnover exceeds 20 crores, e-invoicing, there will be e-invoicing and there will be also not invoicing. In B2C, there is no invoice. In case of the RCM, there will be no invoice, but other transaction, I mean B2B or export, invoice could be generated. Okay. Achha, next question, is e-invoicing applicable to nil-rated or wholly exempt supplies? Suppose Mr. A is supplying taxable goods also, in supplying the nil-rated or wholly exempted supplies also. No, as in these cases, only a bill of supplies is required to be issued, not tax invoices. Then in this case, also invoicing is not applicable.
Sorry to disturb you, sir. Actually, we have certain time constraints. I'll request you to conclude.
Yes.
I'm extremely sorry, sir. Okay, sir, thank you for giving actually such a detailed presentation relating to the recent changes in GST law. It was in fact very insightful and there are a lot of practical aspects to it. Now I request our registrar sir to deliver vote of thanks.
Thank you, sir. Thank you very much. I'm audible?
Yes, sir.
Yes, sir. Yes.
Okay.
Yes,
Thank you very much. I feel privileged to be part of this very enlightening session on GST, which I think everybody would agree that this was one of the biggest decision taken by the Modi government, and it has been almost 5 years, but still we feel that it has not yet been stabilized. In fact, I feel that entire GST regime, I teach constitutional law as a student of constitutional law. When we teach federalism, federal structure of the constitution, then we teach and we discuss and we realize that this is a federal issue. And now the government and other people also will probably blame COVID-19 for this crisis, but some would and people will argue that this was because of COVID. But I guess there were apprehension when this was being implemented. This law was passed in 2017, that this is bound to happen sooner or later. Given the architecture of the entire GST regime, being a federal taxation, or some people say that anti-federal taxation. But nevertheless, it is a reality, and we need to deal with it because this is the law of the land. And government is making changes. In January 2022, several changes, amendments were made in GST regime. Some of these were made in the Central Goods and Services Tax Act 2017 via Finance Act 2021. Other changes were recommended by the GST Council, and I need not to go into the details. The experts have very beautifully they have mentioned all the changes. But it becomes very imperative to organize sessions on recent changes brought in the GST regime. And that is why I am grateful to ICSI Bhubaneswar Chapter for coming forward and making this proposal and making this event a reality, a successful. I thank President CS Jyotirmoy Mishra for conceiving this idea and making this a successful event. I am grateful to the speaker, Mr. Anup, who has both the distinction. He is a chartered accountant, he is the company secretary also, for making us aware the recent changes in the GST regime and the technicalities, the model nuances of these amendments. Thank you very much, sir, for enlightening us. I thank Professor Ved Kumari, Vice Chancellor, NLUO, for giving the welcome address. I thank the Center for Corporate Law, National Law University Odisha, and both the faculty advisors, Dr. Debasis, who is a chartered accountant, and Kaushiki, and other faculty members associated with the center, and all the students who are part of the Center for Corporate Law. So thank you very much for organizing this, and big thank you to all the participants who participated and they asked questions to make this session very, very interactive. So thank you very much for all people who made this event a successful session. Thank you very much.
Thank you, sir.
Thank you, sir.
Thank you all for sparing your time for this program. So now we pronounce this program for conclusion. Thank you.
Thank you, sir.
Thank you very much.
Thank you.
Thank you.
Thank you, sir. Thank you, everyone. Thank you.